will spotlight one of the most influential investors of the global stage, Cathie Wood, founder of NK Invest. Her portfolio offers great insights into future economic trends, high-growth sectors, and disruptive innovation. With a portfolio in excess of 80 billion, AK Invest has exposure to Nasdaq and USA, and closely follows emerging companies in Asia and Latin America. Cathie Wood is recognized for her focus on technology disruption and from leading a bold vision in innovation-based thematic investing. Now let's take a closer look at the key components of the portfolio, starting with its overall structure. For that, we turn to our colleagues, Sofia Perez and Laura Cortez, how would walk us through the details.
We begin by explaining the general structure of ARK Invest portfolio. Management by Cathie Woods. As of 2025, ARK holds investment in approximately 183 different companies through its various ETFs. One key aspect is that 100% of ARK portfolio investment is allocated to equities, that is, stocks of companies. There is no exposure to fixed income as bonds or treasury instruments. Now, why is that? It is because ARK follow a high risk reward investment strategy. They focus on disruptive innovation, companies that are likely to revolutionize industries over the next decade. Unlike fixed income, which offers stability, ARK prioritizes long-term exponential growth, even if that comes with increased short-term volatility. Now let's go at the top 20 companies that Cathie Woods has invested in. Some of the most significant names include Tesla, which makes over 11% of the entire portfolio. Coinbase is the other company, a major player cryptocurrency ecosystem. Palantir is other company. CRISPR Therapeutics is other company. Roku Inc., Teladoc Health Inc., Unpaid Inc., Block Inc., Zoom Video Communications, Exact Science Corp., Beam Therapeutics Inc., Pacific Bioscience of California Inc., Telio Inc., Intelia Therapeutics, Roblox Corporation, DraftKings Inc., Robinhood Markets Inc., Greenco Bikeworks Holdings Inc., Shopify Inc., and Meta Platform Inc. This invest shows of ARK strategy to bet of technology, genomics, and digital transformation, aiming to identify the next big wave of innovation. Finally, let's ask an important question. Why does ARK avoid fixed income entirely? Their focus is fully geared toward high growth companies, while comms and fixed income instruments offer safety. They also limit potential returns. ARK believes that we are entering in a new technology era, and that's why they go into sectors like robotic, bioethic, fintech, and crypto. In short, ARK invests entirely in equities because they're chasing exponential growth and they accept of higher risk as a part of that.
Good morning, Alejandra. Yes, today we're taking a closer look at ARK Invest, one of the most innovative investment firms globally. Founded by Cathie Wood in 2014, ARK is known for investing in cutting-edge technologies that are shaping the field. How our investment is structured and red throws a series of thematic ETF is focused on the disruptive sector, such as artificial intelligence, genomics, robotics, blockchain, and fintech.
The most prominent funds include innovation 35%, hegemony 20%, internet 18%, robotica 13%, and 20%. And so, geographic allocation of our investment north, south, emerging markets, cultural based in the USA, its investment strategy is global diversification. A majority of its portfolio is concentrated in North America, primarily the United States and Canada. And could also invest in emerging markets and countries from the global south. For example, it had exposed to companies like Mercado in Argentina, Yelpay in Romania, and several Asian tech fields. These guys are assets to grow potential beyond the environment markets. The society articulate is situated around disruptive innovation with global outlook. Is funded provide exposure to both the environment economics and emerging markets that are rapidly transformation through technology. Geography is percentage and region. North America is 65%, and emerging Asia 50%, Europe 84%, Latin America 7%, and others 3%.
Understanding where the money flows is just part of the story. Knowing which industries are being targeted gives us a much clearer view of the future category initiatives. Let's break it down by step. What is true the K industries driving the RK Invest platform?
In this section, we're going to talk about that investment horizon and volatility. So let's take a look at the investment strategy by the horizon as shown on the screen. The portfolio credit divided into three segments. For firstly, 25% is allocated to short-term investment, ideal for maintaining liquidity and addressing immediate needs. So the next one, the larger share, 15% is focused on the medium term, primarily in equities, capturing growth opportunities with a moderate level of risk. And the last one, 25%, is amid the long term with investment in infrastructure and long duration, so bonds and growing structures. So this structure seeks the balance stability return with. So the next one, volatility by asset type. Now not all assets behave the same. So the volatility share highlights the difference. Sovereign bonds show very low annual volatility, just over 2%, while tech stocks, the startups can reach nearly 20%. Is a reminder that higher potential return usually come with higher risk. That's why a diversified portfolio like this one blends stable and high growth assets to match the investor so risk.
Disruptive innovation isn't just about what you want. It's about how long you're willing to hold it. Timing and patience are essential in Cathie Wood's approach. To understand your strategy better, let's take a look at the time horizon and the work volatility rates. Tell us more.
The next one, portfolio performance. Let's talk performance over the past year. The portfolio with by 9.7%. This out performance for the Standard & Poor's 500 and the emerging markets index. The question is the main drivers are recurring in the tech sector, which have perverses taken a hit and the rebounding in commodity prices. It's a great a great example of how flexibility portfolio can switch economic shades to derivative returns. The other graphic, 5 years cumulative return, are looking for them here. The log, the log return term between is the in store over the past 5 years. The performance has achieved accumulated growth of 38 38%. That's here that major benchmark index is what counts the benefits of the diversifications. Was remarked in the that his work occurred despite global challenges like the pandemic, inflation, and the geopolitical tensions. Strategies based on adaptability have beat Kate to success.
With global markets facing geopolitical challenges, energy transition, and technological disruptions, how do you build a solid, profitable, and sustainable portfolio? For this, we are joined by Maria Jose, investment analyst and global strategist, how present and innovative and diversified portfolio proposal for 2025.
Hello, how are you? Thank you for the space. Today I want to share with you a portfolio proposal that reflects not only current market trends but also a strategic vision to navigate this fast changing global economy. We're talking about a mixed portfolio with fixed income and equity instruments, which diversifies not only by assets but also by geographic region, economic sector, and investment horizon. The key here is to combine security, growth, and sustainability, taking in the short, medium, and long term. I start with equities, which is where we can capture growth and innovation. One, shares global clean energy. ETFs focus on clean energy, solar, wind, hydrogen, a long-term play on the global energy transition. 2. Mercado Libre, Latin America's local Amazon, with a fast-growing fintech arm, Mercado Pago. Long-term exposure to digital transformation and financial inclusion. 3. Global X Robotics and EA. ETF investing in robotics and EA. A medium to long term bet on a transformative megatrend. 4. Reliance Industries. Play in India's energy, telecom, and digital infrastructure. Medium term invest in a high growth emerging market. 5. Global X MCAC China Consumer Discretionary. Focus on companies benefiting from China's shifts to domestic consumption. Long-term position with strong potential. Now we move to fixed income, where we seek stability, income, and risk protection. 6. Colombia Sovereign Grain Bonds. 2033. Sustainable funds financing environment projects, attractive yields with a 5 and a 7-year horizon. 7. UA's 1-year T-bills. Safe short-term bonds ideal for liquidity and capital protection, currently offering strong returns. 8. Apple 2030 corporate bond. Low risk corporate bond from a financially solid company. Steady income ideal for the medium term. 9. South Africa inflation linked bonds.
protects against inflation in emerging markets, good diversification for long-term portfolios. And finally, 10. Low-risk uranium ETF. A strategic bet on nuclear energy resurgence, volatile, but with high long-term upside speculative position. What is the underlying logic? It is not just about diversity by name, but by economic realities. We combine technology, energy, consumption, and infrastructure, all transformational sectors, and we do it from different corners of the world, from the USA to India, from Colombia to South Africa. The idea is to hedge against inflation and volatility while betting on the growth and transformation. This portfolio is designed for people who are looking for a balance between performance impact and long-term vision. It is not a static receipt, it must be reviewed every quarter, adjusting to macroeconomic change and to our personal or institution goals. Thank you.
Cathie Group's strategy is both controversial and forward-looking. Both style investors like here guides use a compass, helping to read market signals, anticipate trends, and create smarter portfolios. Thank you for joining us on Investment World. Until next time.